So everyone, thank you very much for joining us. Really excited to be doing this podcast. We've played with some names. We thought 2 mugs in coffee is a good start. But basically, this is a chance for us to discuss on a weekly basis the challenges of the C market, the FX, and how that's relevant to both large scale and small scale roasters, and giving advice on or thoughts around how we might approach and how we might make these numbers relevant to us. Joining me is Stephen Bannister, our director, and Stephen is the one who really has been doing a lot of the support for us as a sales team in terms of how we use the C market, the FX. He's been working on our forward books and supporting the company on all things financial. So we're getting his thoughts on where we should be thinking and what we should be looking at. Thank you very much, Steve, for joining us.
Thanks, Ollie. Really glad to be here and have this opportunity to connect with our customers and really anyone in coffee. I think the biggest opportunity today is we can't go and visit any of you. So we wanted to put this together so that we could connect in some way every day or once a week or however many times we get together and post. We're still working it all out. Any feedback, please send it to us, because really this podcast or what we're doing is trying to answer your questions as much as our own at the same time. So this will be a much more collaborative, beneficial conversation if we get your input at the same time. So really, please challenge us in questions and understanding as we go through this journey of the market and sourcing coffee and understanding coffee and getting coffee to your roastery from here. So thank you, Ollie. Glad to have this conversation.
Thanks, Steve. So let's dive right in. Let's look at the C market. We started the week in the low 7s. Initially, we thought the idea was we were expecting to see the C market drop sort of 170, perhaps high 160s, and the market's done the exact opposite. Today, we went with the market at 108.35, completely the wrong way from what we discussed as a team. Give us a bit of an insight into what's going. The frost is over. People are starting to understand what the damage looks like. Is the price we're seeing a result of this is now the damage, or is there something else at play, Steve?
I think it's a really interesting question. And I think the key for all of us to remember right now is we've come out of the frost. We're still understanding and unpacking what that damage will be, where there's been, it could be 2 million bags of coffee. It could be 10 million bags of coffee I've seen as a number out there in the media over the last week at the same time. So people are running their supply and demand numbers now to work out, is the market overall going to be in a deficit position or in a oversupply position from the future crops? And we've got to remember that the market is talking about 2022 now. It's not talking about today or anything else. This is really pricing the future. The other thing to remember is we all think that we've past the frost season, so we're out of the weather market, but we're actually not, because now people are looking to where are the follow-up rains that are going to happen for the Brazil crop. And at the moment we're looking dry. August is looking a little bit dry at the same time. So that's tended to give the market support through the recent week of people can see, well, I don't see any reason that it's going to go down unless we get that rain, unless we get that good rain forecast in September and in the next sort of 6 to 8 weeks through the Brazil cycle. We've got to remember that the coffee tree loves to be stressed and reacts to stress at the same time. So if we get the right rains, we may also see a bigger crop coming, which will hopefully offset some of this frost damage. But that's still an unknown at this stage.
Interesting. And the other thing is, and I've heard sort of, we talk about it as a team. We always talk about sort of there's those people who are trading on the sea market, who are sort of the physicals, the people that need the coffee, need to sell the coffee, need to buy the coffee. But then there's also the speculators. Give us a bit of an insight into what that means and why that matters. Like, what's going on there, and is that also affecting this slightly high price as well?
It's hard to tell. I think with the recent peak on the frost side last month, up to 200, 210 cents a pound, we really washed a lot of people out of the market. We've got the instances of classifying people, and we can probably delve into the commitment of traders report a bit more in future calls at the same time. But it's really looking at, I think, those people active today are much more on the physical side, on the supply side, on the roastery side, more than the speculative side. We probably still have the index funds and everything else that are generally long commodities to justify their positions. And some of those will also be rebalanced over the quarters, as now the value of the coffee contract has increased significantly. So they might actually reduce their holdings of overall futures at the same time. I think, though, volatility is the biggest thing. And at the moment, we have big volatility, but people don't have a necessarily clear direction of where is that market going to be in 6 months, in 12 months today, like they did 12 months ago. 12 months ago, it was low. We could buy, we could trade. It wasn't actually expensive to own futures from a margin requirement point of view. Now margin requirements have doubled, tripled in some instances. So it's more expensive to trade. You need more money to trade now than we have before at the same time. So I think we're seeing a little bit less in the outright trading at the moment, and more in terms of just what is the next key factor from balancing the supply demand. So everyone's trying to balance this equation at the moment. But no one's really thinking it's going to go down, I feel. And that's the problem, is that we're at this stage where we've blown everyone's budgets out of the water. People are, hey, I was good at a 120 market, I was good at a 140 market, we're now at a 180 market, and that's not good for roasters. We've seen price increases already in America, in Japan. We haven't seen retail price increases in Australia yet. I think people are nervous, especially in a pandemic, because no one wants to put prices up on your customers in a pandemic. We want to support them. So it's a very challenging position. And I think those roasters that have got that coverage, they're wondering how long that coverage will be now, because the pandemic is reducing our consumption. Not as much as we think, but it's still reducing. People's inventory that they've got or forward committed to is stretching a little bit further. So everyone's waiting, everyone's seeing now. Maybe if I can wait, things will normalize and will come out to 160, 150, 140. Maybe it will, maybe it won't. So, but I think September, the rains, the weather is really the next key horizon that we should be looking at right now.
Again, it sort of feels, looking back at the history of these big waves and troughs, historically, I think it usually takes sort of 6 months. Is that right? For it to come from a peak to a trough. Based on how volatile the market's been, do you think we can look at the history of what's traditionally happened and say, yeah, it's relevant, or is this almost all bets off?
I think, as someone very wise said to me, history rhymes, doesn't always repeat. Thank you, Mr. Dunlop. And I think some of the key is really about, 2014, it actually took probably 12 to 18 months to get back to a similar level after it spiked. Going back further, it probably took, again, a cycle for that crop to come back. Now, there's replantings happening, there's higher yield yielding trees coming through production and other things, but we've got climate change and everything else on the other side. So there's many factors balancing how fast can we get back to normal, or what is normal. I think we've also got to remember we've done 4 years of coffee below 130 almost, which is the general cost of production for the world, and for most of Africa and other places it's well below cost of production and other things. So we've also got to remember that we've got to balance the equation for the income for the producer side as much as we think about it from the roaster and the consumer side. And that's a challenging thing as well, because without paying the right price for coffee and making sure the producers are surviving, then we could be in a very different landscape in the next decade and beyond.
Yeah. Wow. Interesting. What like taking where we're at then, what we're looking at with the challenges and the havoc caused by COVID, C market price. What should I be thinking? I'm a roaster that doesn't have coverage. What advice would you be giving? Because our traditional go-tos, our Brazils, our Colombias are now sort of priced way above where they used to be. What advice do you give the roaster that is normally using your sort of let's see, your high commercials, your Santoses, that kind of thing? Like what do you suggest? How would you approach it?
It's a very difficult question. I think the first thing I would really do, though, is understand my costs, my blend inputs and other things, and work out where I need them to be, working out how much does that really cost me to create that cup of coffee now, or that 1 kilo blend, which is a general unit item. I think it's been really interesting if we go back over the last 5 years, that when every other price and component of running a cafe has been increasing, the price of coffee has on the whole probably been decreasing. So it's creating value. Now we're seeing that coffee price sort of come up again because of the supply and demand and weather instances. So it's not creating as much profitability for their cafe as it was. Couple that with a pandemic, it's very, 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 very challenging. So I think really look at and talk to people and understand, well, what could work? Where could I go? What could I get out of coffee? Understanding maybe there's things that you can blend with. If we look at the arbitrage to Robusta, it's very, very much wider than it's been. So considerably something like Robusta, which is generally frowned upon, could be a percentage of people's blends. I mean, it's in a lot of large commercial blends anyway. So that's something to look at. Now, I know in certain parts of our business, Ollie, that's also considered a dirty word in some cases, but we've all got to adapt to the situation that's in front of us. And I think that's the principle of survival at the moment, is adapting, because we don't know what's around the corner. We don't know how long we're in lockdown or other things. So I think continually understanding what your blend inputs are and how they react to the overall financials and income generation of your business is really the thing that people should be focusing on right now.
That's awesome. I think like the other thing that gets me is, I think as well, sort of more specialty focused, smaller scale roasters often think that because they're not necessarily using these qualities, that really this isn't impacting them. But we've all talked about it. Of course they are being impacted, and so for example, your specialty producer out of Colombia, he knows that he can get really high prices for, last year what would have been considered a low, like pretty good price. This year is nothing, and he can get much higher. So we're going to see more of that, defaulting on the specialty side as well as the commercial side. Give us an idea of now I'm a specialty roaster, and I do I need to be worrying? What do I need to be thinking about on that level?
Yeah, I think we hope that no one defaults on their forward commitments or anything, but we know it's very challenging. And with the market up potentially 60 cents, that's been one of the sort of price points of difference between commercial and high commercial entry-level premium coffees. Now, the commercial people are selling their commercials at the premium price in some instances, or that's the price that has to be paid at the origins for procurement right now, if there's no forward contract in place. So I think there's always an elasticity between sort of high value specialty coffee and commercial, and that's shrinking, but it's always going to have a gap. And I think we're going to see that those prices will anchor up a little bit at the same time, just because otherwise what happens is those great coffees are just going to go into the commercial commingled lines for that origin at the same time, because the farmers are, I could get, last year I got that commercial, I'm just going to get that the same anyway, that's enough right now, I'm just going to deliver it, I can sell it all in one go and get my price. So that's the challenge. And I think it's also understanding where to from here. Is it viable for roasters to have those long-term relationships? How can we complement and navigate price fluctuations with those relationships and other things? It's sort of this balance of, whoa, I paid you this massive premiums for the last 4 years, so you should give me some of that back now and keep selling me at the same price. I would love for that story to work, but at the same time, you've got to think of what position is the farmer in, and if that income was only base level and inflation is happening everywhere in the world right now, then they're always going to search out for that probably a few cents or cents more, unfortunately. So it's a dynamic, but it's also about building and working with people that you can trust. So the contracts that you've forward written can be executed and can be delivered upon at the same time. So, yeah, I think the one good thing about specialty is coffee is seeming to be an affordable luxury right now, and people are actually spending money on good coffee. We're not seeing our statistics drop too much on specialty coffee. It seems to be a good line item for many people right now. And we hope that continues, especially in our current environment. So I encourage people to look, and they've got to just understand what they're buying, and think more about what's happening in the producing country at the same time, though. So if prices do move or things, then that's things we have to accommodate. The other elephant in the room is if countries themselves change base minimum prices or anything that is beyond anybody's control. So those are things we've experienced last year and probably will continue to experience at the same time. So that's another dynamic that is out there that even if we have a contract may prove a challenge, especially coming into some harvests for the next 6 to 12 months.
That's a good question, actually, because I think, again, there's this assumption we know, the country that has the greatest impact on the seed market price is obviously Brazil, and then probably sort of close after that is Colombia. Tell us, or give us an insight into what other countries we should sort of have on our radar to know, like, they have an impact on the price of coffee. Watch out for the centrals, or like if you're looking at the seed market, what's having that, which countries are having that impact on not just the seed market, but that's supply and demand.
Yeah, I mean, Brazil. It's the monster out there that has the biggest impact. But I think the others is sort of how they balance each other. The one that's probably number 2 is always Colombia, and that's core blend for most of our roasters here at the same time. So looking at those two, the others sort of ebb and flow in a way. So unless there's a huge event like we've had Roya in Honduras in the past or other things, then those things tend to balance. We don't necessarily see or hear, or it gets the media coverage like a frost in Brazil sort of thing. Like I'm pretty sure a lot of our other origins combat frost and other things. I know firsthand, but it doesn't become this media spotlight to drive and change prices. It's just an unfortunate event in their country, and people unfortunately lost some trees, rather than, oh my God, the price has gone completely insane. But that's the mechanics of Brazil, how it's just operating far, far beyond everybody else at the same time. I think there's other challenges where you've got sort of good crops coming out of places like Ethiopia and other places, but you've also got a lot of challenges in that country at the same time. So, but probably rather than any one country being a driver at the moment, the other probably driver is also the logistics challenges of can we get enough coffee to market fast enough? I think we're lucky that from an exchange point of view, we have a good number of coffees tendered to the exchange right now. So it's definitely not on the super low side. There's ability for more European and American roasters to tender coffee and get it out of the exchange. Bear in mind, once you play that game, you don't actually get to pick what coffee you get given if you're buying coffee from the exchange. So there is some risks as well as potential benefit depending how you play that game at the same time.
Yeah. Give us a bit more insight into the shipping. You know, again, I don't know necessarily if everyone knows what some of the numbers are in terms of availability for food. You know, like food safe containers. You know, give us and I know we're aiming to sort of do a deep dive in this, but you know, obviously there's been this impact of you know, getting hold of you know, containers and container ships and containers. Sort of
I mean, it's been challenges on all fronts. I think the most telling numbers that I heard recently within our own sort of supply chain routes was there was 16 vessel cancellations. So those whole vessels changed direction, didn't go on the port. So again, containers that we had delivered ready to go, suddenly the vessel is rerouted somewhere else that was more cost effective for the line. I think we're also seeing spot surcharges and other things. So when we've provided for freight, suddenly there's that freight rate could double or triple in some instances, which is also really challenging because that can maybe wipe your trade out at the same time, or that's a cost that I've got to pass this additional logistics cost onto your roaster, but maybe they can't absorb that at the same time, or how do you balance that? So there's many challenges. I think we're working double, maybe triple the time in advance of putting something on the water than we were pre-COVID 2019, I would say. And we continue to give our origin partners as much notice as we can so they can work with the local depots, get food grade containers, have those allocations when they come in. So it has been really challenging. And as we know, if we don't get a food grade container, if we don't get a good container, that lovely coffee that's spending 40 plus days on a boat sailing around the world may get wet, may get damp, anything can happen to it. And we've really got to make sure that that box we put it in is food grade, doesn't have any damage, doesn't have an issue at all, so that cargo can travel safely.
Wow. The challenges of thanks for that, Steve. The other sort of big one is again, I think probably the least understood, and that's sort of the cost of finance. What does that mean to the roaster? Give us a bit of insight. Why is that important? Why is that a thing? And how does that impact the roaster?
Yeah, finance is a very interesting landscape at the moment. I think, and it's changed exponentially in the last month as the cost to actually just buy coffee has gone up at the same time. So when I only need to allocate, say, $10 to buy a container, in some instances now I have to allocate 20. So where you had enough financing before, now you need double to run the same amount of inventory at the same time for the next 6 months ahead. So that's the first thing. The second thing is really understanding and getting access to finance. So at the moment, there's a sort of saying that although we're at zero interest rate and we've got good loans on our houses and everything at the moment, financing for businesses is pretty tough, is really very expensive. So it's this balance of making that and stretching that and moving it as fast as possible. And I think as long as every business looks after themselves, rotates funds between them, looks after terms and everything else, generally it works. But COVID's stopping everybody's cash flow at the moment, and that's becoming very challenging for a lot of people at the same time. So those numbers bank up, and when people look at financing and other things, I'm not sure how prepared people were for having the right financing in place. So if the cost of your input doubled, are you able to absorb that with the financial cash flow of your business or not? I think the COVID situations force us to look weeks in ahead, not planning on these sort of things and changes to our cost of supply or cost of inputs for our business. So it's a constant thing that every business needs to look at and review and everything. But I think the biggest takeaway is just banks lending money to businesses is not as cheap as it should be. And I think that we would love to see more support from banks and other things to, get finance and then pass that on. So,
yeah, yeah, absolutely. Okay, great. And another one for me, I think, which is really relevant to all of our customers. What would you say is, apart from obviously checking into to this channel and talking to our team, but like for roasters, where do you think the sort of the best tools are to help people make short-term, long-term decisions? What do you suggest should be people's go-to that makes sense, in a layman's terms way? Like, are there any resources that you or advice you would give for people looking to our customers?
I think the first thing is just ask questions, and there's no stupid questions especially in this day and age where the dynamic of the market has changed. We've been in a market for a long time where probably the roaster was in the box seat to buy coffee. Coffee was cheap for them. There was no rush to make decisions or anything else. There was no real thought to make strategy, because if I waited, I got my price 9 times out of 10 if we look at where the markets have fluctuated over the last, say, 3 years. Come the beginning of this year, we've really been on an upwards trend market, and that's been very different. So not many people, depending on how long you've sat in a buying seat or a coffee trading seat, not many people have been in that if they've only been in this sort of seat for 1 or 2 years at the same time. So it's a different market, it's a different thinking. And I think just ask questions. And I think, again, that's one of the reasons to have a vehicle like this to be able to talk to people, is maybe ask us that question. We can talk about and give our ideas. It's definitely not market advice or financial advice or anything that we're dishing out, but just our thoughts. And I think there's a huge amount of noise out there when you look at any commodity or anything in terms of what's actually driving this thing. But the real reason is there's many factors, macro, micro, country, that are driving it, depending on what you look at, or depending even in what origin you look at. at the same time, what's happening in that origin, what's the COVID situation in that origin, what's the port situation and the movement situation in that origin. I mean, Colombia stopped shipping for a number of months this year, so we didn't expect that. And I've never seen a country stop physically shipping. I mean, that's scary in itself in terms of trade needs to continue to happen for countries at the same time. So advice, everything, I think it's really just finding people that you trust in and keep asking questions and keep having conversations. There's no right answer today, but sometimes we need to make a decision because we still need to have coffee delivered, to roast, to deliver to our customers. So I think being prepared to make a decision on maybe not the best ideal situation is really stressful. But at the same time, everyone's in the same boat. We're all a product of the market, or what, given how far we are ahead fixed or anything like that. But we just need to take one breath at a time, analyze what we can do, look at where we can cover, look at what we can afford, understand how that works through our business. Then talk to people about planning. Hey, I want to plan this. I would like to get that. Maybe you can't hit that price today, but maybe if people are working those opportunities for you and volatility allows it, we might not see the price go down, but we could see the Aussie come back. The Aussie comeback could allow us for the price we need. So there's many factors that constitute the sort of DDP or delivered to roaster price. And that's something that I think education is power, asking questions is power, and encourage everyone to do so.
Thank you very much, Steve. That's awesome. I think if we could easily keep talking in detail about this, but I think this is a good place to stop. Thank you very much for joining me and giving us an insight. And I'm looking forward to having more conversations and again empowering people to make decisions. So thanks, Steve. Really appreciate it.
Thanks, everyone, and look forward to questions or topics that we can potentially cover in the future. Bye-bye.
Cool. Bye.